Welcome back. It's again the market has managed to regain the lost ground, and the Nifty is at 84.66. It looked like it will go below 84.50, but immediately there's some buying that's resumed, and the market is closer to the high point of the day than to the low point of the day, and that's really been the feature of this market. Every dip has been bought. Let's get an insight into dealing room chatter then. Nimesh Shah is here with Trader Talk. Nimesh, what's the feedback?
Well, the sense is that 84.50 is a very important level to watch out. If we manage to close above those levels, the sense is maybe you'll see a near-term breakout on the Nifty, and that can take the Nifty all the way to 8600, even to 8650 in the near term. So that's a technical level which dealers are watching out very closely. What dragged the Nifty was the SBI stock and the Bank Nifty in the intraday trade, and the sense is the street seems to be still disappointed with the asset quality numbers of SBI. So that's something to watch out for. Clearly, it's been a mixed job of trade in terms of flows as well. It seems to be two-way flows both from the FIs and the DIs. In fact, there are some large block deals as well where the FIs were net sellers. So that's again will play out into the FI and DI numbers in today's trade. But broadly, as I said earlier, the sense is above 84.50 on the Nifty. You might see the breakout in the cards, but the street seems to be divided. There are some skeptics who believe that this rally should be sold into. So still there is no conviction buying or a conviction trade that we are out of the woods and the Nifty is on an upswing. So that's something to watch out. Broadly, even in the mid cap and small cap, we've seen some first signs of now some bit of selling pressures. So again, that's still vulnerable to some bit of sell-offs in the near term. So the sense is play to the technical levels of 84.50 and a breakout to 86.50, but still there is lack of conviction, and at higher levels you may see selling pressure resuming, and that's something to watch out for. The only good news is in the last 1 week you've seen some bit of FI buying resuming into Indian markets. Across Asia there was some buying, and India seems to be one of the big beneficiaries. So that is something which is good. But broadly we're still in a trading range, but the sense is today's breakout about 84.50 would mean a near-term upside to 8600, 8650 on the Nifty.
All right, Nimesh, thanks for that. Well, those are a good set of numbers that Nbcc has reported. So let's get the chart for you intraday. The top line has gone up by almost 30% for the company. So very good growth in top line. The profits have risen by 25% as well. And the EBITDA, look at the margins, 9% versus 6% earlier. Also, the company has approved an FPO of a 10% post-issue. And this FPO will be used to fund the money that they raised from the FPO will be used to fund the business. So that's the latest coming in on Nbcc. Good set of numbers. The stock has been all over the place, but has recovered from the low point, now down about 0.8%. Even compared to Nomura's estimates, the numbers look much better than estimated. But let's get back to the market. We've been very patient waiting by for ITC, but no sign of the numbers just yet. So let's do one thing. Let's get a handle on what the expectations are this time around. Pragya has been sitting by with us. Pragya, this quarter, it won't come as a surprise that there's a decline in the cigarette volumes because it's been happening for so many quarters. But the question is, how bad could it get?
Well, Sonia, if it does reflect the kind of... there are two things that are going to be at play here. This will be a muted quarter for ITC. A lot of that is already factored into the stock price. Take away, what happened to the stock in the early morning trade, where it was up. But, there is some sort of cigarette inventory, stocking that happens always before the budget. And between Q3 and Q4, there is that big budget that has happened, which has led to the fourth consecutive year of an over 15%, excise hike as far as ITC is concerned. And, of course, cigarettes is the mainstay for them. So on account of that, while Q4's performance could reflect a lot of what we've seen in Q3, where for the first time in ITC's case, we saw a double-digit decline in the volumes, that scenario could repeat itself this time. If there is a cushion that comes in the cigarette volume decline, which is a given this time, that could only be on account of this inventory stocking by the dealers that happens. It's a typical phenomena of Q4, where dealers stock up on the inventory because they're anticipating a price hike. In March, the company has already implemented a 15% price hike, so the full impact of it will really come in Q1, where we'll gauge the impact of the kind of price increases which the company has taken up until now. So that'll be the main factor that the street will have to focus on as to what is the kind of cushion that ITC reports. If it is indeed another quarter of a successive double-digit volume decline as far as cigarettes is concerned, then that will not be taken very positively by the street. They have been reporting 69 last Q3 margins in the cigarette EBIT margins was 69.7%, the highest that the company is reporting reported in its history. So sustaining that would be extremely difficult. There will be some sort of, come off that we see on that front. A lot of the other businesses of the company have become a lot less relevant given the kind of negative regulatory flow that we've seen on this particular segment. But on FMCG, because, earnings report card has been good, we're expecting a 12 to 15%.